Welcome back, everyone. This week, we asked all of the Weiss Research editors which stocks and other investments that they would recommend to our viewers for 2011. And guess what? We got back a lot of different responses. Joining us with our answers is our producer, Jen Amos. Jen, as always, so nice to see you.
It's great to see you too, Jamie. Happy New Year.
Happy New Year to you. So give us some of the investment ideas that these guys and gals came up with.
Several of our editors pointed to stocks that they think will outperform their competitors, not just this year, but well into the future. One of those stocks is Apple, Tony Sagami's favorite play in the technology sector. A share of Apple might be a little pricey at over $300, but Tony thinks it offers the best combination of consumer loyalty and investment profits available right now in the stock market, and will pay off big time for investors who make it a core holding in their portfolios.
Jen, what about the other side of the coin here? Are there any stocks that Tony's just going to stay away from in 2011?
He recommends avoiding traditional retailers that rely too much on brick-and-mortar stores because they're going to get killed by their internet-based rivals in the future. A perfect example is Barnes & Noble. That's obvious if you look at its stock performance last year, a decline of about 20%. Tony thinks that downward trend is likely to continue because Barnes & Noble keeps losing market share to Amazon.com, electronic book sales, and illegal download services.
What about some other investment picks that are going to keep appreciating throughout this year and beyond?
You were talking with Sean about plays in the stock market that are benefiting from the bull market in commodities. And he told me about one more that he didn't mention earlier. It's the Global X Copper Miners ETF, ticker symbol COPX. Copper prices have been setting new records left and right recently because of a supply crunch. Sean thinks that copper shortage will continue for the next 3 years because emerging economies are starting to see a lot more internal demand for the industrial metal, in addition to all the exporting they're doing. The fund has only been trading since April, but Sean likes it over similar plays because these miners are leveraged to the price of copper itself. And in fact, he just added COPX to his portfolio.
Did the editors recommend any other easy ways to play out the commodities boom?
Ron Rowland told me about an exchange-traded note that will go up along with companies that own oil and gas pipelines and storage facilities. The J.P. Morgan Alerian MLP Index, ETN, is linked to an index of master limited partnerships, but doesn't own those companies directly like an ETF. It's been a great performer over the past year, plus it has a dividend yield of over 6%. The one drawback of this type of investment is that the yield is taxable in the current year, while it would be tax deferred for direct investors.
Jen, you mentioned emerging markets before and how their economies are booming. Did anyone give you a pick for taking advantage of that particular trend?
We got a bunch of emerging market picks from Rudy Martin earlier, including one financial stock. Mike Larson also likes emerging market bank, but in a completely different part of the world. ICICI Bank is the second largest lender in India, and it's taking advantage of that country's booming economy. ICICI's profits and revenues are soaring, and its corporate loan book grew by 30% in the latest quarter. Mike thinks that will translate into continued strong performance for the stock this year and beyond.
Any investments out there that Mike is just saying stay away from in 2011?
Mike watches the bond market very closely, and he thinks treasuries are a sucker's bet right now.
Right.
Look at what happened to the iShares Barclays 20-plus year Treasury bond fund recently. It's dropped more than 10% as investor sentiment about the economy has improved. Mike thinks bond prices will continue to fall and interest rates will continue to rise, even if the economy just expands at its current sluggish pace through the year.
All right, Jen, as always, a pleasure. Happy New Year.
Happy New Year again.
Coming up next, we'll tell you whether it's still a smart move to invest in commodities directly, and if so, how to do it. Sean Broderick will be back for that, along with Larry Edelson and Olivier Garay of Weiss Research. Plus, a closing comment from Martin Weiss when Money and Markets returns.